capital should be flowing from the U.S. to invest in China, and then China should have trade deficits that offsets the flows. And we instead live in a world where the money is sort of strangely flowing uphill. To get to reasonable trade, it often is helpful to have people negotiating the trade treaties who are not too ideologically committed. So you want someone negotiating these treaties who's a little bit skeptical and who thinks, you know, we have to negotiate the IP protection, we have to negotiate the taxes on different companies, the investment provisions. All these things have to be seen as part of a package deal.
Joining us now, First Trust Chief Economist Brian Wesbury. Brian, your reaction to that?
He's probably right. You know, back in the 1800s, the United States ran a trade deficit with the rest of the world. We imported capital into the U.S. We bought a lot of stuff from the rest of the world. And so China should be running a trade deficit, too. They're the developing country, but they've built their whole economy based on exports, and that can't last. Eventually, it has to change. So we'll see. I actually think trade deals Peter's talking about a really complicated thing. They should just be one page. No tariffs. That's what we should have. And that's the problem with these 1,300-page trade deals. They're wrong, and they lead to counter tariffs and all kinds of people fighting about things. Let's just get rid of tariffs altogether and find out who can really compete, which entrepreneurs, which innovators, which creators really can compete in the world. I think the U.S. would be just fine.
Do you have a Twitter account? Because you are going to get a lot of hate hurled at you about that, because people are very supportive of, people who watch this program are very supportive of President Trump, very supportive of what he's doing with the steel and aluminum tariffs. But I want to ask you this, in terms of what is going on with the steel and aluminum tariffs, renegotiating NAFTA, China will be the next tariff target, according to many, rightfully so, to pressure Beijing to end these requirements of technology transfer to Chinese firms. There's a study in the Wall Street Journal that they did today where they surveyed economists like yourself, and they worry that a trade war that could derail U.S. growth, but it's so difficult to pin down. It's like pie in the sky. Can you even factor that into investments at this point?
Well, you know, as of right now, by the way, I do have a Twitter account. It's @Wesbury. Tweet away. You know, 9 years ago, in 2009, at the bottom of the crisis, I said, hey, everything's going to be all right. I wrote a book that said it's not as bad as you think, and people hurled hate mail at me. And guess what? The market's up 300% since then. And so I love it when people throw stuff at me, because they're usually wrong about this stuff. People don't understand free market economics anymore. We've put the government at the center of everything, and we got to stop that, because the government can't fix the economy. It never could, and it never can. In fact, the more government we get, the worse it gets. Ronald Reagan understood trade. He said, look, if we're in a boat and they pull out a 6-gun and they shoot a hole in the bottom of the boat, like, for example, if China wants to sell us steel at less than cost, all right, why should we pull out a 6-gun and shoot another hole in the bottom of the boat? All we're going to do is get wet. We're going to drown. That's not the way to fix things. Let me ask you one simple question. If China invented a cure for cancer and they wanted to dump it into the United States market, should we get mad and put a tariff on that? That makes no sense. And so let people produce stuff for less than it costs. As long as we can defend ourselves, as long as we can build ships, as long as we can build tanks and ammunition, I'm okay with that. And right now, between Canada and the United States, we got enough steel and aluminum.
Well, I was going to just say that there's been this back and forth quarrel, to use the Wall Street Journal's word, with Canada over the actual trade numbers, whether there's a deficit or a trade surplus. And if you include services, we have an annual surplus. Lindsay?
But Lindsay Bell here, getting back to China.
Yep.
The trade deficit goes hand in hand with the budget deficit here in the U.S., and with it exploding to over $1 trillion, given the tax reform that was just passed in December. Is that a concern for you? Like you said earlier, the market's up over 300%. Where do we go from there?
Yeah, you know, I mean, obviously I don't like trade deficits, but really what I don't like, or what I think we should focus on, is the spending. It doesn't matter whether we tax it or borrow it. Either way, we take it out of the private sector. And so it's it's not that deficits don't matter. But like, what do you want to do? Raise taxes to take care of the deficit? No, Brian, we got to get the spending down.
That's what I don't understand. I call it asymmetric rage from people, that they are just enraged about the trade deficit because to them it represents the loss of American jobs and a lack of prosperity. But then they don't get angry about the doubling of the debt. They don't get angry at Republicans for now pushing through a 2-year budget deal that takes our annual budget deficits to $1 trillion. They don't care about that. They don't care the fact that we are in debt to the Chinese in even a more dramatic way than we are in terms of a trade imbalance. Brian Bremberg?
All right, so all that about budget deficits, Brian, do you like the talk of tax cut phase 2? Because that probably means bigger deficit, but it also means a boost to the economy.
Yeah, one of the happiest things that happened this week in the last couple of months was Larry Kudlow getting nominated and named as the chairman of the Council of Economic Advisors. It's awesome. I love it that they're talking about tax cut phase 2. I've never seen a tax cut that I don't like. We need to, but to follow through on all of that, we have to cut spending, because if we don't, eventually those tax rates are going to go right back up, and that's the key.
Brian, real quick, Chris, I know that he is singing a song that you know well.
Oh,
in terms
absolutely.
of you better watch your spending.
Yes. Oh, you have to. Otherwise, if you don't, what ends up happening is any benefit from a tax cut gets swallowed up because of your habits.
Exactly.
And so what we have to do is start to wake up and really start to become fiscally responsible.
Okay, I hope people are listening. Brian, it was great to see you.
Absolutely, Dagan. Great to be with all of you.